The former chair of the Canada Mortgage Housing Corporation says that Canada has a housing problem it needs to deal with. Robert Kelly says specifically Canadians are taking on too much debt and have been doing so for too long.
Welcome back, my passive income investors. I like to this crazy real estate market, folks. The home that I am sitting next to here just sold for over $1.6 million, and it only just got listed. The one across the road sold for over $1.6 million. This is insane, guys. 3 months ago, you could have moved an hour out of Toronto, where I currently live in Ontario, Canada. You could have bought an average home for $500,000-$600,000, and literally 3 months later, you could be flipping it for 30% over asking. I swear to God, homes that were at $600,000 3 months ago selling for $800,000-$900,000. We have to talk about this. I don't think this is localized to Canada. I think it's going on in the U.S. I think it's going on globally in this low interest rate environment where we're getting to the other side of this pandemic, and I think people are really fearful that interest rates are going to go up, and they want to lock in low rates while they can, right? Get a good deal on a house. So now, what is a good deal? I mean, in Canada, the average home, believe it or not, sells for $800,000, and that was as of like 6 months ago. I mean, now in this 30% inflated market, I swear these homes probably average asking $900,000 or $1 million at least. And let's presume the interest rates here, I don't know about the US, but interest rates here sit around 1.8% to about 2.5% from a good lender. A bad lender, maybe 3% to 5%. But if you take that perspective of getting a really good rate at 2% on, let's presume you're buying an $800,000 or $900,000 home, you're putting 15, maybe 20% down. You don't have to, you could probably put 10% down, but let's just say about 20%. You're gonna be left with about a $700,000 mortgage at 2% interest rate is about $14,000 a year. That's obviously before taxes and insurance and all that stuff that comes into play, but that's really not that bad. $1,300 a month just on interest before principal. The average payment in Ontario, I believe, that people are paying for their mortgage, principal, taxes, all in, is around $3,200 to $3,600 a month. And I want to pass the question off to you. Can you guys afford that? Because my real question is what happens moving forward? And it might continue to some degree, but the government's going to step in eventually and interest rates are going up. I'm telling you, it's going to happen because you can't price everybody out of the market. That is currently what's happening. Because think, if prices stay up at these $1 million ranges, guys, and I mean, look at these homes. I can show them, this is the area that I'm in right now, and all of these homes are well worth over a couple $1 million, right? So let's presume that we're living in the same situation, right? Because what most people aren't aware of is Canada is one of the fastest first world growing nations. I mean, population wise, we're outgrowing India and China. We have a very dense real estate area, and the government is going to have to open that up and either fix the supply and demand problem by loading houses on the market, or they're going to have to raise interest rates, which is, from what I've heard, for every 1% interest rates go up, real estate comes down 10%. I don't know if that's going to be the reality of the future, but it is something that is very questionable and makes me never want to buy a home here right now, guys. I mean, I can afford to buy a house, and I talk about this a lot. I would have been way better off owning a piece of real estate if we're talking about like my net worth, but the stress. How do you take out an $800,000 mortgage for 35, 40 years? Like, I mean, you remember the days when mortgages were like 15 or 20 years, and now they're 25 to 35? Like, guys, I'm a passive income investor. Like, I want to sleep easy at night, and my money invested, cash flowing, paying my bills is a hell of a lot better than owning a piece of real estate. Now, let's presume I make a lot of money. Maybe I'll buy a real estate if it dips heavy enough and then use my investments to pay for it. But don't rush into real estate right now, guys. I don't think it is appropriate to just dive down into this. And people have been talking about this on CNBC. I've been hearing it on BNN. I've been hearing it everywhere. So I'm going to break down some clips, and I want you guys to listen to this because, oh my God, what an insane conversation that people are having right now. I've just been driving around, taking a look at these pieces of real estate. So hear what the talking heads on BNN are saying, and I'll be right back.
I don't use the word bubble when I think about it. But Canada has a problem, and I think it's time for us to recognize that we should deal with it. And there's a couple of ways we can do that. But when I think about why we have a problem, in the end, it's Canadians have taken on a huge amount of household debt over the past 2 decades. And I don't mean that just in absolute terms. I also mean it in terms of comparing ourselves to other developed countries.
Others are not so afraid to use the word bubble. We have heard that word on this network recently, and data from the Canadian Real Estate Association for February only points to ever higher sales, a 6.6% increase, in fact, for that month year over year. So what does constitute too much speculation in this market? Benjamin Towle is Deputy Chief Economist at CIBC Capital Markets.
So many regulations over the past decade, about 30 significant regulations politicians trying to slow down this market, and this market is not slowing down. The power of low interest rates is so significant. I'm sure that they are losing sleep over it. I'm sure they're trying to figure out what to do. But at the end of the day, Amanda, what we are trying to do here, we are trying to use demand tools to deal with supply issues. The fundamental issue of Toronto, Vancouver, and other cities is the fact that we don't have enough supply. And when you have low interest rates, that really makes the situation much worse. We cannot deny the fact that prices are overshooting and there is increased vulnerability in the system. Now, we have all kinds of things happening to try to prevent the damage. We have B20. We have to remember, if you take a mortgage today, Amanda, you have to be qualified at 4.79%. This is a significant gap between what you pay and what you are qualified at. So there is a little bit of a defense here, but clearly there is increased vulnerability. And by the way, we are not the only ones. You look at New Zealand, and what they did just last month is something unbelievable. They basically suggested that part of the objectives of the central bank over there is housing stability. We have never seen anything like that.
Assessment from the Bank of Montreal describes the Canadian real estate market as boiling. In Vancouver, realtor Kit Sarongan doesn't think the housing market's position is unheard of, but acknowledges how tough it is.
On the current pricing, I'm sure they don't like what's happening, but this is the reality they have right now.
To give you an idea of what home buyers are up against, have a look at this. A letter from a development company offering cash to a homeowner for their property. Meanwhile, in East Vancouver, Sarongan had a house listed at $1.39 million, which sold in days for $1.408 million. Sarongan says the final price was market value and he didn't underprice it.
When people see a $200,000, $300,000 sale over asking, that doesn't mean that it was actually that it went up by 200 in just a month. It's actually they priced it a little lower to create a lot of activity and bidding, and realtors know the real value actually of the market, right?
Andrei Pavlov at the SFU Beatty School of Business says while it might be time for cooling measures, managing a stiff housing supply is the fundamental issue that needs to be addressed.
So yeah, I want to pass the question off to you. What do you guys think about these crazy real estate prices? I mean, I'm in a really nice neighborhood here. This is definitely a premium neighborhood. I mean, as I drive, you can take a look at some of these homes. I don't know if you guys can particularly see them, but some of these homes are literally selling for anywhere from what could be $2 to $5 million. I mean, look at this new construction build that we're just driving up to here as I come around, trying to get the Amazon driver here, but take a look at this next house right here. Brand new construction build, guys. Probably, I'm going to say a $4 million home, no problem, right? In this little tiny cul-de-sac about 30 minutes out of Toronto. And I love driving around and just taking a look at real estate just to remind myself of the economy that I'm living in. And are we going to be heading into some hyperinflated moments? Because I mean, could you imagine if the economy gets hit with hyperinflation right now? Well, these real estate and asset prices are up so much. Like, we're literally, and I say this a lot, guys, we are in the eye of the storm of this pandemic, and it's going to be really incredible to see what the next 3 to 6 months are going to bring as I continue to document it to you guys here on this channel. So if you appreciate what I'm doing for you, consider hitting that like button, consider subscribing, and maybe if you enjoy these Canadian real estate videos, I'll do some further updates. But damn, guys, let me know what you think about this in that comment section below. But stay cool, stay awesome, and I'll catch you tomorrow.